Now, to close the loop on the financial statements today, the last one we're going to look at in learning objective number 6 is the changes in equity statement. Now, the purpose here is obviously to look at why there has been changes in equity, and that information in terms of what the final balances are is fed into your balance sheet. So, the main thing that we're interested here is changes in retained earnings, because that's usually the most frequent change. So the business starts with a beginning balance of retained earnings. It then accumulates profit during the period or loss. It may make drawings or dividends, which are distributed to shareholders, and that then leaves the business with an ending retained earnings at the end of the period. So as we covered last week, it's very important that you're able to calculate that. And that's what I would like you to do now in this question. Now, further to the retained earnings, there's also a number of other sections that can be covered in the statement of changes in equity if these items have actually changed. Some businesses will issue further share capital or purchase share capital back from some of its shareholders. There are reserve accounts, and obviously there's the account we've been focusing on, which is the retained earnings account. Now, all this information in terms of the linkage between the financial statements we've been looking at today is summarized here in this slide. So as I mentioned last week in the workshop, the very first thing you need to do when drawing up the financial statements is to look at what your profit is for the period and determine that. That profit is then fed into your statement of changes in equity. So you look at your beginning retained earnings balance, which was 0 in this case. You then add profits to this particular number, which is 965. You deduct drawings from this particular amount, and that then leaves you with a final retained earnings of $234 in this case. Now, in the question that you just answered, it also had liabilities information of $200. Now, liabilities does not have anything to do with our earnings, and so therefore is not included in this information in the statement of changes in equity. However, if we look below to the balance sheet, obviously those liabilities are included and reported there in the balance sheet, as well as the final retained earnings balance that we calculated above in the statement of changes in equity.